Hello everyone, this is William and Abraham for PropertySold.ca, and of course the big news in real estate this week is that the Canadian government has changed 3 new mortgage rules. We've already discussed the amortization rule, we've discussed the refinancing rule, so let's talk about the home equity line of credit change.
Yeah, the home equity line of credit or secured line of credit against your home, and it could have many names: home line, matrix mortgage, that sort of thing. That rule, the rule that the finance minister has come up with is they've said they're no longer backing these mortgages, backing these lines of credits under a high ratio structure. So, in other words, if you want a line of credit secured against your home, the maximum you can get is up to 80% of the value of your house. So they're not insuring these anymore. The government's saying we're getting out of this insuring these lines of credits. We don't want people dipping into their savings, putting themselves in a position where they're owing even more money to the banks, and maybe spending that money or incurring more debt with that money, So they're limiting that in order to battle the growing amount of household debt that us as Canadians are accumulating.
So they're basically saying to the banks, you can provide these home equity line of credits, but we're not going to insure them.
Yes.
And how is that going to affect the banks? What are some of the possibilities that the banks might, go forward with these new rules?
Well, first and foremost, they're not going to give any mortgages above 80% because they're not in the business of doing mortgages above 80 or lines of credits above 80 that are not insured.
So it's going to be difficult for homeowners to get a home equity line of credit if they don't have at least 20% equity in their home.
That's right. There's no room left, and so they're no longer going to be allowed to do so. And whenever the government tightens rules, because the banks are relatively conservative, they also start tightening their rules as well. So aside from the drop to 80% maximum, maybe they'll extend that further and bring it down even further to 75 or even 70. The banks have been known to go above and beyond the government recommendations. So it could be a possibility, but it's not right now. If anyone wants to do this HELOC, wants to get a secure line of credit against their home, once you set it up, you never really have to do anything with it. It's money you can borrow at any time and pay back at any time. Make sure you do that. You talk to your bank and get this all settled and approved and start the wheels rolling by April 18th because that's the cutoff in 2011. April 18th, 2011. After that time, they will not approve these. But if you get it done, if you get it approved beforehand, then you can get that home equity line of credit. It's useful for a lot of people, and a lot of people have used it for good. Not just incurring more debt. They've used it to pay off high rate of interest on credit cards, loans, lines of credits that are unsecured, and has really brought their monthly payments down and made life a little bit more affordable. So if that's your position, and this would help you in that respect, talk to a mortgage agent, talk to your bank, and get that process started immediately.
Excellent. Yeah. This is William and Abraham for PropertySold.ca.